Be sure to download our free report on a better way to invest, the time-tested strategy to optimize the health and wealth of your portfolio. Click the link in the description below to download.
Welcome back to Golden Rule Radio, your weekly recap of the metals markets and the markets that move those metals markets. And I'm going to underhand soft toss right to Miles here on a down day in gold. What are you seeing, Miles?
Sure. Well, we talked about that 3% channel that we had been in for quite a while. We did push above it. We came back into it today at around 12.13, and we're back up in the 12.20s. I wasn't surprised to see it come back down. I'm not surprised to see it bounce back up, and we'll certainly see how this plays out with pretty positive dollar news on negative euro news, and also pretty negative equity news, even though the last day or two has been a nice little bounce in the equities. So gold still in the low 1200s. I would argue right where it should be right now at these prices comparatively.
How about you, King Dollar, or Mr. Dollar? What do you want to be called? I mean, you had a beautiful chart shaping up on this dollar move. So let's not go to the white metals yet, because dollar-gold relationship's been pretty interesting.
Yeah, so today is the day to talk about the dollar, since we're at a new 16-month high for the dollar index. While gold, sometimes considered the dollar's counterpart, is not at a 16-month low. It is 4% above its low. So what does it tell you when gold is 4% off of its low while the dollar is at a new high?
Well, it tells you that the correlation isn't perfect, obviously.
Good.
So
and
gold continues to climb. Is this a test? Should I raise my hand?
Yes, I know you know the answer.
So with gold continuing to climb and the dollar off, I mean, this is just a rush to liquidity, is it not? I mean, with the Dow putting in a new test of the May lows earlier this year, it was nice to see it actually put in a tiny little interim higher high for the year, coming off the January-February run-up and then the big crash this spring. Which ended in May, and now we're retesting that May low again. So we're not at that ultimate low, but I think there is a definite rush to liquidity here.
Yeah, I think so too, and we can say that from a brokerage firm standpoint. We're seeing more buy trades come in the last 2 weeks than we've seen in months, right? So certainly a ramp up in demand, right? But it's the futures market. You're seeing those indicators too. So we talked about the Commitments of Traders report last week on the program. Well, that same trend continues. You know, since the beginning of October, the COT report on the 2nd of October, we have 41,400 fewer short contracts from a net position standpoint in gold than we did, again, a month ago. 15,000 fewer net short contracts in silver. And that's $5 billion in gold alone. Right, so that's $5 billion fewer dollars putting downward pressure on the gold price. Okay, that's substantial. What that's saying is they're releasing pressure, and that spring is starting to expand back out. That coinciding with the Dow and NASDAQ and S&P weakness certainly has people witnessing a gold price increase.
Yeah, Tori, and I think inching over to the white metals at this point now too. We have to look at the COT report in regards to those as well. I mean, platinum is at about 4,900 net short contracts. I mean, it's almost at parity. And once it hits parity, obviously the seesaw goes the other direction. So platinum, the metal that I don't know how much longer we can keep talking about it, is about to become that opportunity that we've been all waiting for. In fact, the only white metal right now that's still sitting at net positive is palladium, which is pretty substantial. So when we see that transition from palladium to platinum take place, hold on to your seats.
No, that's right. In short, let's summarize this COT report real fast. You've had a 50% reduction in the number of short positions in silver, gold, and platinum. Each are off about 50% from where they were a month ago and 2 months ago. Palladium, on the other hand, is actually up 50% in the number of long contracts. So still a lot of bullishness in that palladium market.
So looking at those white metal charts,
silver has been weak.
Silver definitely is continuing to step down. So, and I'm not being hard on silver here by any means. I mean, we're all silver bugs in this market, depending on what those gold silver ratios are. You know, I'm not a silver bug just for the sake of being a silver bug, but I am a silver bug when it's an an 80-to-1 ratio against gold. And I think we actually flirted with about 76, 77. So we might be seeing some cracks in the gold-silver ratio that we've all been hoping for. But for the time being, I still think the charts are telling me silver's inching back down.
Yeah, and Miles, actually at the time of this recording today, Wednesday the 31st, the gold-silver ratio is actually at 85-to-1. So that also is a good indicator of the fact that gold is the true money metal. Silver's a little more speculative, okay, and it's going to do, as Robert said, the countering to the dollar.
And that's as high as that ratio has been, except for a couple of times. One time a few years ago, and then another time way back all the way to 1992. It's been higher. So you're pushing the upper limits of that ratio.
Platinum, on the other hand, has come back up to retest that declining trend line. So we're sitting right underneath it, and it looks to be compressing into it. So if we see platinum push up another 10 or 20 bucks, I think we could be running up to the next little resistance level around 895, 900. And then finally, palladium, we talked about that all-time high last week. So of course we've seen a bit of a pullback here, although it hasn't really put in anything to show that it's going lower. So I still argue palladium's going to sit here or inch higher until we are given an alternate opinion by what the markets show. But again, looking at that COT report, looking at the increase in long positions all across the board in all metals, including palladium, even though it's already fairly long net, I think that we should continue to see palladium push up. And I just think platinum's going to catch up. We're not necessarily talking about gold going down, silver going up when we're talking about the ratios. We're not talking about platinum going up and palladium going through the floor by any means. What we're talking about is a change in speed that these metals move in the same direction. For a while now, palladium, as an example, has continued to go up as the other metals have gone down. So that's where we see that divergence in direction. But as we see some of these things shake out in the equities market, and certainly as we see some of the things shake out in the dollar market after we maybe hit some of these interim highs, maybe it does come up to about 100. But we're still looking at an inflationary system, and we're still looking at a move towards the value of real assets. So as those real assets climb, you just want to make sure you're in the correct real asset that outperforms the other ones.
Speaking of ratios, boy, look at the Dow Gold Ratio. It's been coming down, meaning gold's outperforming stock market. And it was encouraging as a gold investor to see, as the stock market sold off heavily, gold reacted as I think it should be, which was it was going up and acting as a safe haven. I think there is a lot more of that action to come. So stay tuned to that. The Dow Gold Ratio, Miles will throw a chart up on the screen here for you to see. Ultimately, in the long 120-year Dow gold relationship, if you chart that 120 years, you have these huge cycles, and ultimately that Dow Gold Ratio target, I would put it at two or three. The last time that it got down into that bottom range, it got down all the way to 1. In 1980, gold was 850, Dow was 850. And so we're going to talk a little bit more about that as time progresses here, I think.
I do too. And as you see on this chart, we actually for a bit dropped below 20, right on that Dow Gold Ratio. We're just back over that now. We did see 45, I think, at the peak of the market before the recession, the economic crisis. And so there is a lot of move, but you've got to expect it to get down into those single digits, like you're saying. And what that means is that, yeah, they can meet in the middle. Okay, let's say the Dow goes to 5,000. Well, that means that gold's at 5,000 if we see your 1-to-1, right? It's not going to be at the 800 point, but gold will be climbing with inflation over time. And so even if the Dow stays up at 10,000 and we see a 2-to-1, that's still $5,000 gold.
Yes, you did hear us correctly to say single digits with that Dow Gold Ratio down to the 2-3 to 1 range, because today sitting at 20-to-1, you'd think, really? From 20-to-1 down to 2-to-1? But that is the big cycle. And yes, that's 1,000%. So that's gold outperforming the Dow by 1,000%. Just to clarify for those listeners.
Bring it on.
We'll see. It got down to what, 5 or 6?
Got down to 6.
Yeah.
Yeah. Back in 2009, 10, and 11, it trickled down, all the way down to 6-to-1.
Yep. And that's where we will be excited about the stock market. We're not excited necessarily to be paying full price or full price plus a premium for the stock market today. I'm more excited, frankly, and this might sound crazy to the gold investor. I'm less excited about buying gold today and more excited about buying stocks when after this huge crash that we're going to inevitably have. But I'm going to sit in gold for the time being and just wait it out.
Sure. Well, wouldn't it be a better way to say you're more excited to transition your massive gold holdings today into even more massive Dow holdings down the road?
Totally. That's a better way to say it. I'm excited about
10 cents
gold.
on the dollar.
Yeah.
So
because of what it's going to provide me in the future.
Yeah, and the numbers don't have to be astronomical either, like you brought up. I mean, imagining the Dow going back down to 14,000 is not unreasonable on a pretty massive correction.
And gold at 7,000.
And gold at 5, 6, or 7 puts you right in there.
Yep. That gives you a 2-to-1 ratio. Moving on, this week is important in the lives of everyone that cares about politics. So what do we have? What do you guys think? Are you guys going to make some predictions about what the outcomes are? I know
you stole my lead in. I didn't want to answer that question. I was going to throw it at you.
Nice work.
Underhand soft toss, right? To you, buddy.
He's looking right at you, Tori.
That was an overhand fastball is what that was. I'll swing and miss, but I'm thinking, okay, if we get a far move to the left, I do think that gold will rally. All right. I think initially it's going to rock the markets. I think that you'll see the equities get hit. Because it'll be a vote against Trump and his economic policies, and I think the markets won't like it, right? And so initially I think we could see gold come off, but then ultimately, depending upon policy and laws that start getting batted around, gold will rally as a result of that. That's my prediction if we move far left. Miles, what if we stay sort of right where we are?
So if we stay middle of the road, I mean, we're not talking about too much change here except for a big 2-year patting on the back for the Republican Party. I mean, the Republicans keep the executive, the House, and the Senate. And with the Kavanaugh ruling over the last couple weeks, it's a pretty big win. So I think we could see some additional social unrest. But I think we also see, obviously, a pretty aggressive continuation of Trump policies because the guy doesn't know if he's going to get reelected or not yet. But in the same breath, there's always this weird expectation of change that can throw a monkey wrench into the markets, even though if they end up settling back out the way everybody expected they would while that's taking place, it can be fairly traumatic. So look back to what most people in America assumed was a Hillary Clinton victory because of the polls. Gold continued to rally, and then about halfway through that night, when we realized she wasn't going to win, gold obviously fell through the toilet with the expectation that the average gold investor tends to be a little bit more conservative leaning. So an expectation of economic policy that tends to favor the more conservative-minded. So I don't think it really matters. I think over the course of a couple days, we're going to see some pretty aggressive market moves up and down, but ultimately, I don't think it actually goes anywhere. Nobody wants the market to go anywhere dangerous during an election. I think that the plunge protection team, no matter who's in power, they're going to step in and they're going to keep markets from going exorbitantly up or tanking all the way down, just to keep the people focused on what they want them to do, voting the way they want them to vote.
We'll see you next week. Thanks for listening today. You can follow us on Twitter at ICA Gold. You can like us on Facebook. You can go to our website at McIlvaney.com, or please call us at 800-525-9556.
Thanks for listening.
Have a great week.